prompted by an article by Andrew Woods on Friday 11th of February 2022 of the Motley Fool, clues in the name, thinking that the BT share price could soar if this happens. So let's have a little look and see what he's got to say. Here's the key points. So there's two possible deals concerning BT Sport brand. Altice owner Patrick Drahi, hope I pronounced that right, has increased his stake from 12% to 18%, sparking takeover rumours, and the cash flow has increased 6% in recent results. Well, Patrick Drahi increased his stake quite dramatically over the last year or so, which actually probably accounted for a major part of BT's share price rise over the last year. And the BT Sport brand, well, they're obviously reshaping what they're doing here. So with a couple of offers there. Let's have a look at it. So US streaming service DAZN deal's supposed to be worth $800 million as a good cash injection for BT to have a significant hit on that debt pile at $18.2 billion. Okay. And also there's probably because of the possibility of a joint sports venture with Discovery Communications. This will equal venture with BT adding Eurosport UK to its portfolio of channels, which will complicate the DAZN deal. So the things are changing and happening. I was probably to have a look at BT again because in our little village, BT are putting in fibre broadband at long last. So we might be able to move from snail pace broadband up to something a bit quicker in the coming months. So he thinks there's going to be a huge boom in the price. Let's have a look. Not that one. There we go. Onto Simply Wall Street. They put in a fair valuation using their discounted cash flow valuation model at $4.36 a share as opposed to the current price at $1.99. Yeah, it's very high. I mean, BT's share price has been nowhere near that sort of figure for a very long time, and I think only the possibility of a takeover of BT by Patrick Drahi would actually make a difference. But Drahi has expressed opinion in the past. He's very happy with BT's management and really just wants a share of the business, a bit of a Warren Buffett style of investing. Just wants to buy the shares and hold them. The DCF calculator on Simply Wall Street tends to look about 10 years ahead and try and guesstimate from that point. So you have to take it with a big pinch of salt, really. But BT should be a fairly stable business that should be easier to predict than some of the more volatile or high growth stocks. So let's take a look at SharePad and have a look at the share price over the last 2 years. So it dropped down to just under £1 a share, October 2020 as its low point, and that really was a nice bargain price. And it's really from that point that Mr. Drahi started buying into the business, and you can see that rise up to just over £2 a share before falling back down again, and then rising on the current news. So also dividends are back in, although the smaller dividends with BT. It also has prompted some interest from investors. So it's a very difficult one to call. If I'm looking at the 2-year figure there, let's go back and have a look at say a 5-year figure. Yeah, we're seeing a big drop down from 350, where it really tanked all the way down to that under the pound figure. Further back, we see anything that's resembling the figures that Motley Fool seem to think it may actually be worth. So, I mean, we're going to go back all the way. Oh yeah, if we go back to 2016, they were on 500 pence a share. So it may well be that there might be something in what he's saying there, and also their valuations. But I think it's going to take some massive changes in terms of the debt level and everything else, and a serious buyout coming in to actually hike the figure up to anything near that. And I think that's probably going to be a bit of a gamble for it to hit that figure. It's just a personal opinion. If we have a look at my sums on the results, let's go to the BT one. There we go. Okay, so having tacked the figures in from Yahoo Finance onto it over the last few years, and we go back to that 2016 high figure, we can have a look at the net profit obviously being considerably higher than where it is at the present time for 2021. So getting up to that bigger figure is going to rely on that net profit coming up quite dramatically, as well as all those other factors coming into play. Assets versus liabilities. The assets are growing, and the debt level is staying constant but very high. So it's quite a high debt to equity ratio there. And come back up to free cash flow. That's been declining. It's up and down, but we're back on the down figure again. That's really reflected by the high levels of capital expenditure going in, which my guess is going to be very much into the fibre broadband rollout across the UK, which is a massive replacement of infrastructure across the UK, but obviously a very solid long-term investment. So is BT a buy at the moment? A sell? The analysts seem to think it's a buy. Personally, I'd be really wanting to buy it that back of that pound a share figure, but whether we're going to see that opportunity in the near future, I don't know. We'll have to wait and see. So it's up to you, and look forward to seeing your comments in the comment boxes below.